Hey all, my name is Paul Borosky and I am the owner of Quality Business Plan. And what I'd like to do today is to give you all some tips and tricks on how to write a trucking company business plan. Specifically, the segments that I want to drill down on today is the SWOT analysis section as well as the startup cost. So the way the video is going to work is I'm going to give you some tips and tricks on creating and writing up your own SWOT analysis, as well as how to structure your startup cost. From that point, give you a little bit of experience about myself, who I am, what I do, why I do it. And then from there, we'll sum it up, wrap it up, and put a pretty little bow on it. All right, so with that said, here we go. Tip number one, SWOT analysis. So what the heck is a SWOT analysis? The SWOT analysis, what that means, it means a strength, weaknesses, opportunities, and threats. So our strengths and weaknesses, we're focusing on our company. What does our company do good? Or what do we not do so good? Or what are some of our weaknesses? The O and the T, the opportunities and threats, that we're going to be looking at the external aspect of our business. We're going to be looking at the external environment, our competitors. We're going to be looking at the industry as a whole. We're going to be looking at the economy. So that's how we're going to kind of break it down. So I'm focused on the trucking company, a specific trucking company. One of the strengths may be documented plans. A documented plan could be a business plan. Hey, you know what? You write your business plan. You now have got a documented plan. You've got a documented plan. That is a strength. 1 in 10 small businesses have a documented business plan. So if you've got one, you're ahead of 9 other businesses in your industry. Next is going to be, you can have a strategic plan. So your strategic plan, where do you want to go and how do you want to get there? You can also have a marketing plan. How are you going to be getting your business for the freight? You're going to be going to load boards. Are there specific load boards you're going to be using? Whatever those strengths are, whatever those documented plans are, or whatever your plans are in your head, you document them. You put on you put them on paper so you can share with people, whether it be employees or whether it be a lender or investor or friends and family. Whatever it is, if you've got documented plans as a strength, make sure to document it as a strength. Next is going to be for the strength for over-the-road truckers. I always recommend to my clients when I'm writing business plans for them is that when you do your strength, make sure to include your geographic area serviced as a strength. If you're going to be doing the lower 48 states, well, that's a strength because you can pretty much take it anywhere in the U.S. The freight, you can pick it up, take it wherever you need to go. If you're going to be focused on your local and regional, well, that's a strength too because now you've got a niche market. If you're going to take whatever you can get, whether it be in the U.S., Canada, Mexico, well, again, you're going as a generalist strategy. So again, make that, that is a strength because, you're going to be able to pick up whatever freight you need, take it wherever you need to go and call it a day. So that would be a strength as well. So whatever services you're going to provide in geographic area, make sure to document as a strength. Next, when you're doing your weaknesses, keep it general. Keep it, common knowledge. Don't go, really diving into and really thinking hardcore about, what are some of your weaknesses for your company. I mean, it's a good idea to do that, but don't document it and share with everybody because now you're telling everybody, well, here's some really critical weaknesses in my organization. You don't want to get that detailed, that personal. You want to keep it broad. You want to keep it general. For example, you're a startup organization. You're a startup over-the-road trucker. Well, guess what? That's common knowledge. So you might as well state that as a weakness. Everybody knows that, small business when they start off, it's tough. It's a struggle. It's a real slugfest out there. Well, guess what? Common knowledge, you might as well state it. But if you're getting a late model truck, from the 1990s, it's 500,000 miles, you're picking up a little bit cheap. You don't want to use that as a weakness because it can be breaking down and driving up your maintenance costs. You kind of want to stay away from that as a weakness. That's a little too personal, a little too close to the vest. Keep it broad, keep it general, and keep it common knowledge. Next is going to be opportunities. Once you start up your over-the-road trucking company and you've got your trailer and you've got your truck and you're on the road and you're going and you've got a little bit of time to think about, yeah, I'm here now. What's next is inevitably going to come and dawn on you. And when that does, make sure you have your opportunities. Where do you want to grow from here? Do you want to go ahead and start a fleet and bring on some more, semis and some more trailers and start hiring some drivers? Do you want to go ahead and expand into the box trucking industry? That's growing right now. Thank you, Amazon. So wherever you want to go, make sure to document that as your opportunities. Next is going to be, if you're going to grow, opportunities might be to hire additional drivers. And, that might be something that you're going to go ahead and do. And you can come up with a benefit package as to, what you can provide the drivers as compared to other competitors to be able to not only attract the drivers to work for you, but to retain them for the long term as well. So opportunities might be to hire additional drivers. As for threats, again, for the threats, you want to keep the industry specific. You want to keep it broad. I mean, if you've got 10 different trucking organizations right within your locale, that's a little too close to home. That's a little too heavy of a threat to document into a business plan. Keep it general. I'm not going to say keep it light, but keep it general. For example, if the economy goes into a downturn, into a recession, well, when that happens in recessionary times, households are buying less products, so there's going to be less demand for shipping. When that happens, then the price paid per mile might go down. So that is just an industry-wide threat, and that would be something that would be really optimal to put into your business plan as a threat. It's not only as a threat to you, but it's a threat to everybody else too. So it's it kind of equals out with that. All right, next, let's take a look at startup costs. So when you're writing your business plan, one of the most important segments of a business is going to be, well, how much money do you need to get this party started? And that's going to be your startup cost. The way that I structure my startup costs, first and foremost, I'm going to I break it into categories. So we got startup costs. Right here is the dollar amount that you're going to be investing, as well as the dollar amount that you're going to be taking out for a loan. So for this example, we're saying that, as the over-the-road trucker, you're throwing $50,000 into this startup company, and you're going to be taking a loan of $200,000. In total, you're going to have invested into the company $250,000. The reason I put the startup cost in the reason I put the equity and the debt into the startup cost is because I want to be able to show alignment with your categories for your cost. So when we're doing a startup cost right here, the first two lines is going to be the money invested, $250,000 right here. Then subsequent lines, your working capital, your truck purchase, your trailer purchase, your safety equipment, your prepaid items, your office equipment, miscellaneous licenses, and just miscellaneous in general. All these numbers right here total up to $250,000. You need a total of $250,000 to start up, and here is the breakdown: equity investment to $250,000, loan amount $200,000, total is $250,000. You are now in alignment with the funds invested with the startup cost. Next thing, keep in mind. Right here is I'm using general categories. For example, working capital, what that is the money that you're going to need in order to keep the lights on, to pay for the fuel until you get paid, to pay for the maintenance until you get paid by your shippers, to pay your employees if you're going to have employees, to pay the electric bill, to pay your insurance. This is going to be your working capital, or the money that you've got set aside to keep operations going. We're not going to break this down dollar for dollar as where the money is going to be allocated. We're just going to give them a general category. We want to give them enough information where they know that you're thinking ahead, but we don't want to give them so much information where we're kind of tying us into, well, you said you needed $7,500 of the $47,000 for employee costs, whereas now you're at $8,500. You've exceeded the sub budget of the budget, and now you've got some explaining to do. Whereas if you just give it a category, you should be okay, and it's still showing details, but not so many details. All right, next is going to be, if they do want the details. So, for example, you present your startup costs here with the categories, and they say, well, why do you need $1,000 for safety equipment? What I do, and what I recommend my clients do, is that for each one of these categories, on a separate document, for a separate piece of paper, or a separate Excel sheet, state each one of these categories and then itemize it on a different document. For example, our safety equipment, we might need a GPS system and road triangles, total of $1,000. Well, we've got our information here as to where these costs are going, and then we can plug it in right here for the safety equipment, $1,000. So in our business plan, they see this right here, but in our notes and in our research, we will have it categorized and detailed in a separate document. We want to present details. We want to give the reader in the business plan enough information that they know what we're doing and how we're doing it and where, in general, the costs are going, but we don't want to give them so many details that they're going to nitpick us to death. Well, you really need $750 for a GPS. Can't you do it for, $550? And then they just nitpick it to death. And by the time, you're done with this, you're out, another $15,000, and now you've got lower startup costs. And then when you actually go out there to start your business, the costs were really what you thought it was as compared to what somebody else was. And now you don't have enough money. So keep it general, give a little bit of fluff in your startup costs, but make sure you have a detailed section ready to go if they ask for the details. All right, so hopefully those thoughts and ideas were helpful tips and tricks for your trucking company. For trucking company business plan writing were helpful. And just a little bit about me. Again, named Paul Borosky, Dr. MBA, and I am a professional writer, specifically a business plan writer. So if y'all do want some help writing your own business plan, please pick up the phone, give me a call, send me a text, send me an email. I would be delighted to write the business plan for you. If you do want to write your own business plan, but you just need some insights and some guides, for completing your plan, check me out on Amazon. I've got several books written for that are focused on business plan writing as well as financial modeling. So just check me out on Amazon. And finally, my education background. I am an adjunct professor and subject matter expert for both business and finance. So if you've got your business plan locked away, you need some financial projections for your trucking company, I'd be delighted to help in that arena as well. All right, so let's sum it up and put a little bow on it. So in summary, make sure your SWOT analysis shows more strengths than weaknesses. So if your SWOT analysis has 4 strengths, make sure to include 1 or 2 weaknesses. If you got 8 strengths, make sure to have 3 or 4 weaknesses. I wouldn't recommend going more than 4 strengths for your category, but always have more strength as compared to weaknesses. Always have more opportunities as compared to threats. It's just a great way to structure your SWOT analysis. Next is going to be include a buffer in your startup cost. So if you have your startup cost and your working capital, you think you're going to be okay with $25,000, add another $5,000. Add a little bit of buffer in your categories. It's better to have too much money and be able to give back to your investors, or you have more money to pay towards your loan, than not have enough money and now you've got a different conversation with your lender and with your investor saying, hey, well, I thought I could do it with this amount, but I really need this amount. That's a bad conversation to have. So make sure to include a buffer in your startup costs. And then finally, if you need some help with writing your business plan, pick up the phone, give me a call, send me a text, send me an email. I'd be delighted to help with the business plan. If you only need your financial projections done, I'd be delighted to do that as well. And for a little bit more information on how to write your own trucking company business plan, visit my website, qualitybusinessplan.com, how to write a trucking business plan. And then if you do want a template, my template, it's a solid template. It's good for over-the-road truckers. Check it out at qualitybusinessplan.com/trucking company business plan template. It does come with a Word document, and it's structured where you just change the highlighted areas. It also comes with the financial model. You open it up. I've got some tutorials available, and you just go in there, you change some of the numbers, and you customize the financial model that way. All right, so hopefully this information was helpful. If you liked it, give me a thumbs up on YouTube, and as always, have a good one.